All right, guys. So good evening once again. This is Futures Brizio. It's 7:40 p.m. on Monday, March 10th. Hope everybody had a great day. And I am live. So if you do jump into the chat, make sure you say hello. If you're watching this afterwards, recorded on the channel, of course, make sure you smash that like button, subscribe to the channel, and leave any questions or comments down below. I appreciate it, but make sure you smash that like button right now, and really helps the YouTube algorithm. So, purpose of this tonight, guys, is talk about forex trading using currency strength divergence. Now, this is something that, to be honest, I used to use a lot more, and I'm going to try to get back to it because, as I mentioned this morning, two things I mentioned this morning. One is that um, I do trade a little bit of forex and a little bit of futures, and I'm really thinking about whether that's watering things down a little bit too much for me in terms of being spread too thin, and that's something I'm still looking at. But the other thing I mentioned this morning was that, and this is probably known by a lot of you, but in case you don't, obviously when you trade forex, you're trading currency pairs, right? You're not trading an individual currency. You're trading one against the other one. That's why they call them pairs. And so, in order to have the best movement for your trade, to have price move aggressively and impulsively on your trade, you want to be able to pick currencies that are, or currency pairs, where the two currencies that are part of that pair are diverging, where one is really strong and one is really weak. That will get you the most momentum. And if you can't find if one that's really strong and one that's really weak, then at the very least you want to find one that's strong and another one that's neutral, or one that's weak and the other one neutral. Okay, because if you find a strong one and a neutral one, the price will still go up, maybe not as aggressively, but it will go up. And if you find one that's weak against a neutral one, price will still go down, maybe just not as aggressively as you will get when you have divergence of one strong against one weak. Okay, so this is one way you can do it. Now, in order to do this, you need to look at the index. This basically an index chart of a currency is basically a calculation where they weigh a particular currency. They use a formula to weigh it against other currencies, and they come up with this. In this case, is a line chart. I mean, you can look at this as a candlestick chart too, but for the purpose of what I'm doing, you can just set it as a line chart. You don't need to see candlesticks because all we're doing is looking for trends. Okay, and so that's what an index is. It's a preset formula where they'll calculate the strength of a major currency against a basket of other currencies. Okay, and it's not really super important to know how they calculate that. Just understand that's what the index is. It's a measure of, again, in this case, say the Canadian dollar against a basket of all currencies, probably against all the majors. And then they come up with an index and they plot it as, in this case, a line. Or again, you can also plot it as candlesticks too. And, the same way that you chart any currency, any asset. Okay. And so that's what you're looking at here. And so I'm in TradingView. So there's different ways you can get this data. There are special indicators you can buy. I used to have one actually from MetaTrader that was a currency strength meter, and it would go down at the bottom of a chart. If you had MetaTrader, it would plot somewhere down here, like where you put your oscillators, and it would look very similar to what I'm showing you right here. It just would plot at the bottom of the chart. And so that's one way you can do it. If you have something like TradingView, but I don't know if you can do this with the free version of TradingView. You might have to have a paid version in order to put multiple currencies or multiple assets on one chart. You might be able to do some, but I'm not sure with the free version how many they'll let you plot onto one chart. There might be a limitation of like a few. I have a paid version, so I pretty much have unlimited access to all these different ways of setting up charts. But basically, what you do, guys, is you can go over to add symbol, and all of these indexes basically end with XY. So for the dollar index is DXY. And so if you're not sure, what you do is you open add symbol in TradingView, go over to indices, and you just type in, if you're not sure, you can type in like New Zealand currency index. And here it is, ZXY. I said they're all three letters. They all end with XY. And you can just, you want to get one to start. So, you add this to your watch list, and then you can see over here it's on your watch list. Okay. And so now I have the Canadian dollar index. And it doesn't matter which one you lead with. So, but they're all up here. So the DXY, and I don't think you can see this. But anyways, the dollar index is DXY, the Australian is AXY, the British pound is BXY, the Swiss franc is SXY, the euro is EXY, the New Zealand dollar you just saw is ZXY. That's the only one that's a little weird. And the Canadian dollar is CXY. Okay, so that's how you can add them to your watch list. Okay, and then so if you want to look at them individually, you certainly can over here on your, which again I don't think you can see it the way I have my screen set, but your watch list is over here on TradingView, and for those of you that use it, it's over on the right side of the screen. It'll show you all the items that are on your watch list. Okay, and so basically what you want to do is once you have one of them up on your screen, then you go to the top left corner. Again, I think this is outside of your view. Next to the asset in the top left corner, it says compare add symbol, and you click that. It'll open another box, and you just add all the ones you want. Okay, so if I wanted to add, let me just take the euro off of here right now. So let me just take that one off. And now I'm going to pretend like I want to add the euro. So I know it's EXY, so I don't have to look it up. But if you do have to look it up, you just type in, euro dollar, and it'll come up currency index EXY. Okay, you can see it down here. Now, before you add it, it's going to give you three options here: same percent scale, new price scale, or a new pane. Okay, I have them all set as same percent scale. Okay, and what that does, it's going to plot them all on one screen, and it's just going to use basically a percent scale to show you the percent change between as each one moves, like how much it's changed from any given point in time. Okay, it doesn't matter. That's not the important point. It doesn't matter how these are stacked. All we're doing is looking at current price action, momentum. Like, this is the dollar right here. You can see it's been going down, so it's trending down. This one in green is the Swiss franc. It's been trending up. So that would be a good one to trade, to potentially look for options. Okay, so what did I just take off there? I've got Canadian. Japanese. Okay, so I got to add the Japanese yen back on. Okay. All right. Same price scale. All right. So we've got 1, 2, 3, 4, 5, 6. I'm going to leave, see, we got 1, 2, 3, 4, 5, 6. Now I'm still missing one here. Canadian dollar, US dollar, Australian. I know I don't have New Zealand on it. That's 3. British pound, 4. Swiss franc. Oh, euro. I got to put the euro back on here. Right. EXY. EXY. There it is. Same price scale. Okay. All right. So this is basically what it looks like. Now, again, so I've got the Canadian dollar, which is this teal green one. Again, I don't think you can see these, and I apologize. I should have adjusted my screen, but it doesn't matter for the purposes of showing you. I'll point them out as we go, because all I want you to do is just basically look at recent price action. Okay, now this is the 1 hour chart. I'm going to go out to the daily, and we're going to look at them at the daily chart. Now you can take your mouse and you can adjust your screen so you can kind of see these things separated out the best you can, because again, it doesn't matter which one plots on top of which. You're just looking at the momentum. You're looking at what price is currently doing on these things. So, all right, and that's really all you're looking for. Okay, now, the reason why I don't put the New Zealand dollar and the Australian dollar on here is because they pretty much move the same, and it just makes the screen cluttered. And it's the same reason why I don't have the British pound one showing. I mean, you could put them all on. You could put all 8 up here. But the British pound and the euro move very similar. And so I don't necessarily need to put all those on there. I want to try to separate these out. So we've got 1, 2, 3, 4, 5, 6 currency indexes on here. Now these two here are kind of the same color, which I don't really like. So let's change the color of this one, which is the Canadian dollar. And we're just going to change this to a different color. Let's make it white. Okay, because the colors are very close and we want to be able to see the difference. Okay, so now you can do this on any time frame, guys. And again, I always recommend start with the daily time frame, just like you do any top-down analysis. You know, you can do this on any time frame though. So if you wanted to do this on like a 1 hour time frame, you know, you could. Just understand that, again, just like anything else, if you're not looking at the higher time frame, you know, you might be missing part of the picture. So let's just look at all these really quickly. So the US dollar index, you can tell, is clearly trending down. This bright green one is the Swiss franc, is trending up. You can see this white one, which is the Canadian dollar. You can see it's pretty much neutral. It's been flat for quite a while. This one here, this teal colored, is the euro. This one's starting to trend up. It was kind of neutral, but it's moving up now. This purple one is the Australian dollar, which you can see is also pretty neutral. And this red one at the bottom is the Japanese yen, which you can tell is strengthening. Okay, so let's just take these two right now. So this is, again, the US dollar. The green one's the franc. So if we go over to the US dollar Swiss currency pair, which is right here, you can see it's been trending down. It's pretty much is going to correlate exactly with where these two have started moving down. So if we look at both of these, for both, so we're looking at this green one and this kind of, it's not really red, but let's just call it like a pinkish red color. This is the dollar. This is the Swiss franc. If we look and we put the crosshair, since about, let's call it the beginning of January, they've been starting to diverge. Okay, so now if we go back to the daily Forex chart and we look at when this downtrend started, you're going to see it was right at the beginning of January. You can see down at the bottom there, January 13th, depending where you put it. But around January 13th, it started its downtrend. Okay, so now we go back to the to this. And let's look at the last time. Let's go back a little further in time. So at this point here, this is, let's call it late September of last year, okay, for both of them. Okay, the dollar was going up, the Swiss franc was going down. So what does that mean? That means the dollar-Swiss pair is going to be going up starting around the late September last year. So let's go over here, and that's going to probably be right down here. We'll grab our crosshair and look down here, and there you go. There's the end of September. That's September 25th, 26th, 27th, right in here. And the price went up, okay? And so that's how you basically use this, okay? Now, if we look at something else right now, let's look at, well, let's say, what's this teal one again? This is the euro right here, and this one right here is this purple one is the Australian dollar. So, right, euro, this one's the euro, this one's the Australian dollar. Yes, okay. So let's look at the Euro-Aussie currency pair between about the end of December, and maybe to the beginning of February. Okay, Euro-Aussie daily chart. What did I say? The end of December through early February. And what do we have right here? So here it is, end of December, starting from this point through early February, right here. What do we have? We have the price trading in a range. Okay, the price is trading in a range. It's basically this area right here. Okay, that's what we were just looking at. If we go back to the indicators, what did we have during that time? We had sideways price action. We had two neutral currencies that were stuck in a range. Okay, and so that was, would not have been a good time to trade those two that currency pair, because at the time they were quite neutral and they went nowhere. Okay, I mean, you can see starting at the end of February, the euro right here started going up. Okay, you can see it's a little hard to see against the me see if I can just move the chart. Okay, here it is. So right here, again, don't worry about how they changed position. That doesn't matter. But right here, the end of February, you can see the euro started shooting up, and the Aussie, which is again this purple one, has continued to basically move sideways. And so what do we have on the euro at the end of February? Right there, started shooting up. Okay, so now we have a strong currency against a neutral currency. And again, that will lead to upside move, and this has been very aggressive. Okay, so as I said at the beginning, you want to either have two currencies that are either diverging from each other, okay, where one is strong and one is weak. That's the perfect, and that's the easiest thing to see in this graph. Or you want a strong against a neutral or a weak against a neutral. A strong against a neutral, again, will lead to an uptrend. A weak against a neutral will lead to a downtrend, okay? It may not move as aggressively as what we just saw in the Euro Aussie, but it will move, okay? So that's what you're looking for. Now, again, this is the daily chart, so it really, this is, kind of, again, like anything else, you want to set your expectations in terms of, where you're looking. So I'm just trying to adjust this thing so I can kind of see. So this is a pretty good look on this time frame. Now I can see all 6 of these things pretty clearly. And you can tell dollar down, Swiss franc up, euro up. The white one, again, is the Canadian dollar, pretty neutral. The purple one, again, is the Australian dollar, pretty neutral. And the red one is the Japanese yen, very bullish. Okay? All right, so that is, like I said, if you want to kind of ground yourself on the daily chart, this is perfectly fine. Now, people are going to say, well, can you bring this down to any time frame? So like if you want a day trade. So let's go down to like the hourly chart. So here we are on the hourly chart. So it's the same thing. We're just looking at an hourly chart. All right. And you can see you have to play around with this. But again, during this time, we've got the same thing. We've got the euro, we've got the dollar index going down. We've got the Japanese yen going up. So let's look at the time on this. This was Friday, February 28th. Okay, Friday, February 28th. So let's go look at the dollar yen on Friday, February 28th. I don't think I have that up here, so let me just open that. Put my template on here. All right, we'll go to the 1 hour chart, which we're on. And what I say, Friday the 28th. Let's take the scroll off my chart. All right. And let's go and find February 28th. Where is it? February 28th. Okay, let me look at this one more time. Whoops. February 28th. Okay, so we had the US dollar. This is the US dollar. This bright red one is the yen. Okay, so again, February. Oh, excuse me. Yeah, no, February. Yeah, 28 February, 1500. That's like 3 o'clock. Okay, so February 28th. Hourly chart. Okay, and that's right here. Where is it? Sorry guys, I should have had this mapped out sooner. Okay, so that's right here. Okay, so we zoom in a little bit. And this is what I'm saying, guys, that this is going to work better on higher time frames because because on shorter time frames you're just basically catching these little changes of momentum that swing back and forth. So here's February 28th. So again, let me find 1500 hours because I think that lines up right. So it's right here. So we had this move down. Okay, 1500 hours on my broker. actually 1500 hours would have been on this broker. 1500 hours is about 10 o'clock in the morning. So 3 o'clock on my broker. Yeah, so it's somewhere right in here. And you can see the price did go down. Okay, so we had divergence. Okay, so we had the dollar weak and the yen strong. Okay, but as you can see, the move is not as aggressive. Okay, but because you're only looking at a short time frame. Okay, so if we go down to like a 15-minute chart, let's see if we can find something here on the 15-minute chart. So let's look here. And again, we're only looking at 15 minutes of time here. So let's look at Tuesday, March 4th. Let's look at the, let's see, what the white is the Canadian dollar. This pink one again is the US dollar. So let's look at dollar CAD on last Tuesday. Dollar CAD last Tuesday, the 4th. We'll go down to a 15-minute chart. On the 4th. Dollar CAD on the 4th. That was early on. So it's right here. Okay. And you can see we had this push down right here. Okay. Dollar CAD. All right. Big push down. All right. And at that same time, we had this divergence on the heat strength index, right? We had the Canadian dollar rallying, the US dollar falling. This is divergence between these 2 points, and that's a great area to sell it. Okay, to sell the dollar Canadian. Now remember, these are 15-minute charts in this case. So that move, you can see, was not sustained very long. At some point, see, this move started at around 1245 on this chart, which on my broker is going to be later. On my broker, that's going to be like 2045, because this is 12:45 p.m. But this is actual New York City time. My broker chart doesn't line up with New York City time, so that would be about 20:45 on my chart. So it's in the afternoon, right? It's 12:45 p.m. New York time. So you can see from 12:45 to on March 4th until 10:45 on March 6th. So this is basically 2 days. The price went up and then it started to come down again. And so at this point on Thursday, March 6th, around 1 o'clock, that trade essentially would have been over, because at that point the Swiss franc, the Canadian dollar started trending down, and so is the US dollar. So from that point, that trade would have been over. Okay, because you can see now they're both heading into the downside. And when you have two strong currencies or two weak currencies against each other, then that's going to cause sideways price action. Okay, so remember, the ideal thing is to have one strong against one weak, or alternately a strong against a neutral or a weak against a neutral. What you don't want to trade is two strong ones against each other or two weak ones against each other, because if you trade too strong against each other or too weak against each other, you're going to get essentially sideways price action. Now, maybe not perfect sideways. You might get little moves in one direction or the other, but for the most part, during that time when they're both trading in the same direction, both weak or both strong, you're going to get essentially very little impulsive price action, because they're going in the same direction. You want them diverging. Okay. So if I go back to so obviously the higher you step up in these time frames, the better you're going to be in terms of being able to pick ones that are diverging. And you can also, potentially hold a trade longer too, because you're not going to be worrying about, well, this is only a short-term move because I'm looking at a short time frame. Okay. Now, I've got all these on the chart, which makes this a little hard to interpret. I have to keep readjusting the chart. But if you know that you're trading on a higher time frame, and that by looking at this that probably it's going to go in that direction for a while, then you can take off all the other ones. You don't have to delete them on TradingView. You just click this little eye I know you can't see it, but you click the little eyeball symbol and it just basically hides them. So if I only wanted to trade the Canadian dollar against the Japanese yen, let's just say, I'll just leave those two. So here they are, okay? Now I can just watch this, and as long as we see this divergence happening, then you know that you can be looking for short positions on the Canadian dollar, Japanese yen, because you've got the yen strengthening, you've got the Canadian dollar basically weakening or at least neutral. And so you can pick out two or three currencies that seem to be diverging, and then just focus on, obviously, well, you need to have multiples of two. So you've got to have, basically, well, no, I guess not, because you could have the Japanese yen against two other currencies. So you basically just want to pick out two or three, four currencies that have some diverging qualities, and then just monitor those. And then at some point they'll enter into like more of a ranging position where, let's say these two start ranging and start moving more sideways, then you don't necessarily want to watch those two anymore. Go find two other ones, or two or four other ones, whatever. Okay. But the point is, guys, this is just another way to kind of analyze the market. So instead of having to like go through every currency pair that you look at, that you follow, and trying to determine maybe what it's going to do next, or that day, or that week, or whatever, you can go and look at these indices, kind of like isolate each currency on its own, and just say, okay, this Japanese yen currency is trending up very clearly right now. So I know that any currency against the Japanese yen is going to be going down. So I want to look for a weak currency to trade it against. So the something like the US dollar, okay, so here's the US dollar against the yen. You can see where they've actually crossed each other. So here's the US dollar against the yen. We have the Japanese yen rallying. You got the US dollar going down. So you know right now that the US dollar against the yen is a great currency pair to look for shorts on, okay, because you can see they're clearly moving in the opposite directions of each other. Now, of course, it's not going to go on forever, and you want to make sure that you're looking at your chart, at your actual currency pair chart, and identifying areas where the price might turn or at least slow down, and be prepared for that. So on the dollar yen, if we go back to, like, say, the daily chart, you can see there's not really a lot of room for this to stop until we get down maybe into this area here or down here. So, maybe somewhere, this is a really big range because it's a daily chart, but maybe just general ballpark somewhere in here. There's no reason for this thing to really stop. So you can say, okay, as long as prices hasn't made it down into this area, then I am going to stick with this pair, and I'm going to go to a shorter time frame, say the 1 hour or the 15 minute, and every time price rallies, using whatever pullback method you want to use, I am going to look for short. So if I want to use the 9 period or 10 period simple moving average I've talked about, every time price breaks above the moving average, you go short. You can see anytime that happened, this was a pretty good trade. Okay. Every time it rallied, that was a good low risk entry. The price went down. Okay. And so, that's basically what you do. So step one is to find two or more currencies that are diverging in price from each other. In this case, the US dollar versus the yen. And then you want to probably go back, and this is on the 4-hour chart, but you can do this on the daily. I would start with the higher time frame, the 4-hour or the daily. Find the ones that have the divergence. And again, the higher time frame you go, the more opportunity you'll have to let it play out over time. And then you want to go to your actual currency pair chart. Go to, like, say, the daily chart, and just look at your levels. Make sure you're not running into a major high or low or major swing point somewhere where price might get hung up, which we don't have that right now on this pair. And then, so that's your second, that's step two. Go to the daily chart, mark out your levels, make sure you're not running into something major. And then the third step is to drop to a shorter time frame, 1 hour, 30 minute, 15 minute, and whatever entry method you use on pullbacks to go ahead and look for areas to enter. You don't want to just enter blindly just because they're diverging. So in other words, yes, they were diverging, but would you have wanted to have entered like right here when price just put in a new low? No, you want to wait for a pullback, because if you had entered down here, you know, if you had your stop far enough away, okay, yeah, you could have waited this out, but you would have had a lot of drawdown. Instead, wait for it to pull back and then go short. The same thing down here. You don't want to enter down here. Price had fallen from this point. You want to wait for another pullback and then go short. Okay, so you want to look for low value areas, and obviously if it's an uptrend, it would be just the opposite. Okay, so that's basically your 3 steps. Identify diverging currencies on higher time frame. I recommend 4-hour daily chart. Okay, and then go to that currency pair chart. Look for your levels. Make sure you're not running into a major supply or demand, support or resistance area on the daily chart. Okay, where price might get hung up or reverse. And then if that's okay, then you can start looking for entries on your shorter time frames. Your 1 hour, 30 minute, 15 minute, whatever, using whatever methodology you use to find entries. Okay, and so it's just another way to do it, and it can help you eliminate a lot of junk trades and trades that, instead of sitting here having to look through 150 pairs or even looking at 5 pairs and none of them have divergence on them based on what you see here. You go and you look at those, you pull up all 5 indexes and you're like, well, they're all moving in the same direction, or they're all moving sideways, which is going to happen sometimes. Sometimes it's going to happen unless you're following every currency pair and every currency index. If you're only following certain ones, yes, at some point they're all going to either be moving in the same direction, all up, all down, or all sideways. And if that's the case, and those are not ones you probably want to trade. In that case, you want to go look for, look at a new index, maybe something you haven't looked at before, and eventually out of those 8, you're going to find at least one pair, probably more than one, but at least one pair where there's divergence, and that's the 1 or 2 that you focus on until that changes. Okay, so I hope that makes sense. It's really pretty simple. It's a very mechanical, straightforward way, and the nice thing about it helps filter out all the junk pairs and allows you to not focus any time on pairs that are, on a pair that has 2 currencies that are moving in the same direction or both neutral. Okay, because those are not going to be helpful. Those are not going to be good opportunities until they start to diverge. So you can put those aside and go look at indexes where there is divergence. And once you identify that, then you can go to the currency pair chart, the regular currency pair, and start looking for your opportunities for as long as that divergence is happening. And again, if you spot a divergence early enough, especially on a daily chart, you know that that's going to go on for quite a while. Like this dollar yen divergence really started happening back here in January. That's when they really started diverging. We had the Japanese yen going down here prior to that, bottomed out here. We had the US dollar going up, peaked out right here. And then you can see at this point, it starts heading down. Okay, and then you can start to use things like market structure, and just you can use your regular technical skills, right? So the Japanese yen was moving down right here. It broke this trend line. The same things that you use on your charts, right? Moving down, broke the trend line. So really anywhere from here, and then you had the US dollar going up, okay? And then, right here, it broke a little trend line. So there's your divergence, and it's basically from this point on, anywhere from in here, you can start to look for those, for those trades. And chances are, again, if you identify it on a higher time frame, 4-hour or daily chart, those are going to go on for a while. Okay, those moves are going to go on for quite a while. I can zoom out here to the this is the 12-hour chart right here. If you want to get a wider perspective, you can go to the daily. So anywhere between the 4-hour and the daily, I think is a good analysis tool. Okay, so I hope that makes sense, guys. If it doesn't, please leave me questions or comments down below. You might have to rewind this, watch it again, but it's really very simple. It's basically a 3-step process. It's very mechanical, and it can help you find the right type of pairs to trade and avoid the choppy sideways ones, and avoid you having to waste time looking for trades on pairs that are not moving, because the two currencies again are moving in the same direction or they're both neutral, and you're just going to waste your time. You're going to get caught up in a lot of choppy market conditions. Find the ones that are diverging, or at least have one neutral and one strong, or one neutral and one weak. Those are the ones you want to focus on. And again, if you pick those out on higher time frames, that's going to just give you more opportunity, especially if you can identify a change in direction early on. That's absolutely awesome. That's not going to happen all the time, but you can pick it up midstream, as long as that divergence continues. So, all right. So again, guys, questions, comments, leave them down below. Smash the like button, subscribe to the channel. I hope that was helpful, and I will talk to you all soon. All right.